What is going on, everyone? Welcome back to the channel. Wanted to put out another video about Nvidia. It's been a little while since I've made a update video on this stock. Last time we were really covering Nvidia hard, guys, was back here at the end of 2018 and the middle of 2019. When Nvidia was still trying to recover from the crypto boom, and of course the stock seen roughly a 50% correction, the crypto boom had come to an end. Right here at the end of 2018, Nvidia was running into all-time highs, getting close to $300 a share. This is why it's always important, especially if you are a day trader, you trade options, what you do, why it's always so very important to be a long-term investor, because now, and especially over the past week, Nvidia has rose to over $419 a share. Its 52-week high was $431 a share. Now it's safely resting around $408. So it started last week at $429 a share, did see some lows around $393, and is just stabilized and run itself back to $400 like I mentioned a minute ago. So what we're going to talk about in this video, guys, is Nvidia stock still a buy at $400 a share? I'm going to cover some relevant news articles. I'm going to cover some big things that have happened for Nvidia lately, try to get you in a good direction for the next earnings report, kind of what to expect there, and just give this stock a nice overall look. Or should you wait for another correction? Let's go back to the 5-year chart. As you can see, this stock doesn't really give a lot of opportunities for a correction. Going back here to 2015, when it was trading at $17 to $18 a share, it pretty much run in a parabolic spike all the way up to around $280 a share before any big correction happens. So sometimes you need to jump in and ride, and trust me, if you've been investing for a lot of years, there's other stocks that are pulling back right now that are a much better opportunity to buy into those dips, while stocks like Nvidia and let's say Amazon and some of the bigger tech companies, some of the cloud-based tech companies are really running into highs. It's really not when you want to be buying them the most, but this is a rock solid company. We've done a lot of coverage of Nvidia, and I want to be able to break this down further and bring you some solid content. So before we get started, guys, do me a favor, drop a thumbs up on this video, and I appreciate all the support. And make sure to subscribe to the channel if you have not done so already. Alright, so the first thing I want to do real quick, guys, let's compare Nvidia to its peers, okay, some of its peer companies. Right here in the blue outline, that is Nvidia, and as you can see, they've grown roughly 2,142% over the past 5 years. Now there has been a chip maker that has outperformed them. It's another big holding that we have, and that is AMD. This is the purple outline right here. AMD has grown almost 3,000% in the past 5 years. AMD has come basically from, it was once a big company and it went all the way down to penny stock levels, and now has recovered to roughly a $60 billion chip maker company, and very, very strong growth coming from advanced micro devices. So in the world of chip makers, AMD has actually outperformed Nvidia. Keep in mind, it's about a $60 billion company, where Nvidia is a $250 billion company. So AMD definitely has the potential to catch Nvidia in market cap, but Nvidia is a $170 billion bigger industry. However, let's check some of the other competitors down here at the bottom. In the orange is Qualcomm. They've grown 43% in 5 years. I have Broadcom, that's another big chip maker we own. They're up 133% in 5 years. Still very good growth, and still outperforms the S&P 500. And then of course Intel. Intel will be the last one here in the blue. They've grown 136% in 5 years. So it is just so dramatic how much Nvidia and AMD as a pair have outperformed pretty much all the major chip players. And I really want to draw a little bit of attention to that, just because how strong of buys, and again, I can't emphasize enough what the power of long-term investing is. I'm sure 5 to 6, maybe 700% is very easy and doable if you stuck to a investing strategy. Well, like I said, you might have bought Intel or Broadcom or some of those type of companies and not seeing much of a return at all. Now this news actually broke about 2 weeks ago on July 9th. That is when Nvidia passed Intel on market cap. And in this article, they just talk about Nvidia now holds the title of biggest chip maker in the US and the third largest in the world, despite not actually producing its own chips. It leaves that to third-party foundries such as Taiwan Semiconductors. Intel's chips, on the other hand, are created entirely in-house. Nvidia stock has seen a 68% rise in 2020, again, right in the face of the COVID-19 pandemic, all the other factors that are affecting the economy right now. Nvidia has not blinked an eye. And like Samsung, the lockdowns have actually benefited Nvidia. The explosion of people working from home meant a higher demand for its enterprise products. Therefore, prices can go up and Nvidia makes more money. Now, I do want to briefly touch on this. Reuters notes that despite the stock price surge, Nvidia's sales are still only a fraction of Intel's. However, Apple is actually dropping Intel, which makes me even more bullish on Nvidia. If I'm going to pick a couple of chip makers in this space, I'm going to stick with Nvidia and AMD through this change. Not saying I don't think Intel can make a nice rebound and can get back on top. Just saying that losing Apple as a customer is probably deeply going to affect not just stock price, but earnings and many other things over the next couple of years. Then on July 14th, just a couple of days ago, Nvidia's price target was lifted on their data center strength. This is another thing too, guys, where they really benefit from the lockdown, the COVID-19 crisis. Companies like Nvidia become even more valuable. And ahead of the Ampere GPU ramps for data center and gaming, Cowen raised its Nvidia price target from $410 to $475. So this $410 price target that they set a while ago has already been met and exceeded. They're up in the price target to roughly $475. Cowen maintains its outperform rating on Nvidia. The company has a bullish average Wall Street analyst rating and a $393 average price target. So it is actually trading a little above its average price target. And I guess that creates the argument that maybe it is not the absolute best time to be buying this stock. It is a wonderful time to own it. And I can tell you from my personal experiences, starting with a very, very small position in Nvidia, this has grown to be one of my biggest holdings, and I haven't really invested that much money into it either. The stock has done all the work for me, so it's a fantastic time to own Nvidia. There might be better opportunities to buy it. We're just going to have to see. So Nvidia has not officially confirmed its next earnings report, but its speculative date is August 20th, 2020. That gives us roughly 1 month before Nvidia will have earnings. So going back to their last earnings report, that was reported in May. So right here, this consensus estimate, they were expected to have $1.36 on EPS, but they reported $1.80 with a revenue estimate of $3 billion. They actually reported $3.08 billion. So they blew earnings out of the water last quarter. Guidance did dip down a little bit. As you can see here, for quarter 2 of 2020, their earnings estimate is 85 cents. So expectations have dropped a little bit. This is just kind of the nature of these companies, and I'm expecting Nvidia to respond like they always do. Nvidia has a very, very solid earnings history, okay? This stock has not just run on hype or anything like that. Like I said, they've always met expectations and beat them. Even in a few of the situations where they did dip on earnings due to the end of the crypto boom, you know, they still are always very, very close to their revenue estimates. And right here in the middle of 2019, that's when you've seen a big reversal. And they started going back up, 2.2 billion, 2.58 billion, 3.01 billion, and on and on and on. So if you follow this company, you've watched them on earnings over the past couple of years, they're always rock solid on earnings. I'm expecting another very good earnings report. I feel it's important that we do touch on some of the fundamentals. So just to re-emphasize how solid of a company Nvidia is, their profit margin 28.18%, operating margin over 29%. The return on assets is 11.62%, which that ranks as the absolute highest in the industry. And then return on equity is over 29%. So very, very good and clean numbers in their profitability and management effectiveness. Their quarterly revenue growth, this is the number I try to focus on most when it comes to investing, 38.7%. That is a very, very solid number. And over here to the right, there is not a lot of shareholders that short Nvidia. Even though it did see a big move in stock price about a year and a half ago, did take roughly a 50% correction. Still only about 1% of shareholders are holding this stock short. And let me tell you, they have been getting burnt if they've been shorting it. Under $200 a share because it's made more than 100% return since that time. Nvidia also has a fantastic balance sheet. It is hard to find a weakness in this company. They have $16.35 total billion of cash. and only $7.58 billion of total debt. What does that tell me? That tells me they're very financially secure, and even if the economy is to worsen, this company will be okay. Nvidia does pay a small dividend. Their annual dividend rate is 64 cents a share, which only comes out to about 0.16%. However, nobody owns this stock for the dividend. They own it for the growth, okay? I've gotten many little dividend payments from Nvidia. It never has added up to be very much. Like I said, where I've made my money on this stock is the rapid increase in growth, the 2,200% increase in 5 years. Lastly, let's take a look at the cash flow statement. $4.95 billion of operating cash flow and $3.19 billion of levered free cash flow. So very strong fundamentally. Like I said, Nvidia is one of those rare companies like Microsoft, like Google, like Facebook. It's almost hard to find a weakness in their fundamentals. They are so well balanced. They do everything the right way by the ways of Wall Street, and that helps probably explain the massive growth rate that they've seen over the past 5 years. And now the last article I do want to mention to you, this news is a little bit dated. It's roughly a month old. Back on June 23rd, it was announced that Mercedes-Benz and Nvidia signed a deal to make cars more like iPhones. And that just goes on to say that Mercedes-Benz cars forming a partnership with Nvidia to develop car, computers, and artificial intelligence infrastructure for self-driving vehicles. So this would actually probably be a move to compete with Tesla and NIO. And this pact aims to create vehicles that are defined by the software which powers them. That would position the companies to benefit, such as Apple from the iPhone, a product that has been successful partly because of its operating system and apps built and sold on top of it, right? So, and if the companies successfully develop such technology together, it could generate a significant, if yet unknown, amount of revenue for Nvidia as the car industry continues to look to tech to remake itself. So there's really a lot up in the air here. This is a very exciting opportunity, but an unproven opportunity. And like the article says, if they do generate a strong technology in this space that really seems to take off, who knows where Nvidia could go from there. They could actually stand to be one of the most valuable companies in the world if they can penetrate the automotive industry. I will have videos coming soon on Tesla and NIO. Those are two stocks we keep very close eye on, and we're also very invested in. Now Nvidia looks to compete in those spaces as well. Something I really did find interesting about this deal, representatives from both companies said technology resulting from the joint effort would begin to be developed in the Mercedes-Benz vehicles around 2024. The partnership isn't exclusive, and both companies are free to work with rivals on other sorts of technology to accomplish similar goals. So this is not an exclusive partnership, and Nvidia is still free to work with whomever they want. So I think it's a very open-ended deal with just tons of upside. I'm sure there might be possible failure in there, but this is something you can look to possibly take shape in the next 1 to 2 years. And then as said, again, they're really aiming to be deployed in the Mercedes-Benz vehicles in 4 years from now. So a very, very exciting thing, an opportunity that could possibly place Nvidia as a serious player in the automotive industry. So let me conclude this video with just some ending thoughts to kind of send you on your way with, is Nvidia stock still a buy here at $400? I'm gonna say yes, it is. But in the true spirit of long-term investing, just don't go all in on any one position. You might want to start a position here at $400 a share and think about it. We have an earnings report 1 month away, and we could see a significant move up or down in the stock price depending on how earnings look. So just leave yourself some room if this stock does trade down a little bit. However, I think from here moving forward, I can see Nvidia reaching $500 to $600 in due time and possibly surpassing that. $1,000 per share is really not out of the question for this company as they continue to grow and get bigger. Nvidia is definitely a stock you want to own. Nvidia remains a strong buy and is being very competitive in many different markets. So that's all I got for the video, guys. Make sure to go down in the comment section and tell me your thoughts and opinions on Nvidia. Is it time to sell? There's also an argument there. So thanks as always for watching, and have a great day.